Now, if you look at this schematic here, okay, you can see I'm going to explain it step by step. So let's consider that we have prices moving like this one. So here we have dips of pullback. So here we have extension, right? Then we have dips of pullback dips, which is happening here as you see. So we need one, two, three. We have three legs, and after this high is taken, higher high taken, it becomes the prior higher high. So we have newer high, and we have a depth of pullback. So you could consider this one also engulfing. Okay, in RTM they call it engulfing, or you can call it breakout. It doesn't matter whatever model you want to just have. So it means that we have the direction bias, right? Price moves, and this is the last leg we have. Okay, here. So each of these legs have their own probability. Some of them are low probability, some of them are high probability. Now, if we move on, so the price comes and retests one of the zones. It could be here, it could be here, it could be even here. So overall, it does this, right? Now, these zones, okay, are retested. It doesn't matter. So what zone, we're going to just dive more into these things. So actually, as a trader, we're just looking for some logics that where the price is going to return from. Okay, continue. So this is our direction. It means that we're going to buy here. So we're going to identify our last leg. Okay, so our last leg here is the pullback. Here is the extension. So as you see here, extension later. If you look at this bearish scenario, the same stuff happens here, right? So we have this movement, we have three legs. The last one is extension. So after this one is created, so we need to go on, and after this one is created, we need to go on and have our depths of pullback. So this is the way that it is kind of it. These ones act like GPS. Okay, you're not getting lost inside the chart. Okay, in the time frame. So afterwards, we're gonna have also other. Okay, like this one that we have this retesting here. Also, we have retesting of the depths of pullback. It could be here. It could be deep retest or any other thing. So also here is the low probability trading area for us to buy, and here is high probability trading area for us to sell, right? Again, it is low probability. Pullbacks are low probability areas, and extensions are high probability trading areas. So again, pullback and extension in the bearish scenario. Now, if you look at it, if you look at inside this movement, so we have some movement. So inside this movement, the higher time frame movements are made by lower time frames movement. Okay, how do they move? It is moving based on fractal nature of the market. So the same movement that we have here, the same movement we have there inside these legs. Okay, in the lower time frame, it means that it has its own extension, it has its own pullback, it has its own depth of pullback. If you see it here, look, here we have depth of pullback, another depth of pullback, another depth of pullback, right? Now, if we move to higher time frame legs pullback, okay, here we have this movement similar, right? This also has its own depth of pullback, depth of pullback, depth of pullback, right? Now, the same stuff here, okay? Now, this moving up, okay? After it moves up like that, so we are having depths of pullback, depths of pullback, and depths of pullback. Again, in the pullback of this, as I told you, after we establish the direction, we have low probability trading area and high probability trading area, right? So this is movement that we have here. It comes from up, continues to the depths of it, and it has its own, what is this? Depths of pullback in the lower scale, okay? So again, this extension, the same story that we had here. So it's going to continue the same logic, right? So it's going to continue the same logic. Dips up pullback we had here. Okay, it has its own dips up pullback and so on. Look, this movement, I'm not going to bore you to tears. This movement is the same as the prior one, but this is the bearish scenario, right? So now here is the again, after establishing our trend, we have low probability trading area with its own dips up pullbacks, and we have a high probability trading area with its dips up pullback. So our intention is that whenever the price is going back to retest this zone, liquidity zone, which is dips up pullback, there inside it, we have nested dips up pullbacks that they are forming this nature of moment. This is the price reaction to the liquidity that is inside. So they're coming down, and we can just hunt our trades and take some trades. Look, if we want to go short here, so you could say that, okay, price would come here in the higher time frame. We could have this, okay, like this. And if it comes back to this area, barely we could get 1-to-1. Okay, but what about instead of this one, we can narrow it down, okay, using this simple concept and trying to take a trade out of lower time frame zone based on the liquidity, and our stop loss is based on the lower time frame, okay? And we're targeting the same target that we had, okay, like this one. Uh, Price moves the same. Okay, price has the same range and the movement is the same, but you're going to have higher RR. But it needs a context. Okay, it needs a GPS. Okay, so obviously, if you are trading in depths of pullback, and the higher and the deeper the retracement, the higher the let's say RR is. So, for example, look, you go. Let me just give this example in the bullish scenario. You will get it. So, for example, if price comes down, let's say to the deepest place ever. So like this, if it was not coming here and it was having deeper retracement like this one, right? So like this one. hmm So up until it gets there, it is going to have 15R, right? So some people that they have FOMO, they are trying to get into position to in here. They are having huge stop loss and they're having this TP, okay? They're barely getting 1-to-1 with the same kind of movement, right? So sometimes you're losing the trade, some trades if you're just setting your entry points and zones here, and the price comes and doesn't just retest here. It goes up like here from there, and it never comes to your entry point that you're expecting. So that is the trading, okay? So that is not just a playing game. So we have to wait, okay, up until your target, actually the target of entry is reached, you do nothing. So, but if you just do, if you wait and after, let's say, 5, 6, even 10 trades, okay, 10 missing trades, you have just one of this, and let's say out of these 10 trades, you have two of them that they come and they're just breaching your strings, okay, and taking your stop out, and you could take two of this, okay? Is it fine? I mean that you're just getting 5 to 10% up win rate. So actually, it is way higher with the system we're going to see, but the point is that the deeper the retracement, the better it is RR wise.
Hi guys, I hope you're doing well. I'm here to just explain one of the very good concept, which is engulfing. So by AshiQ PDS, so I'm going to explain it to clear up some confusion. So this system is based on a multi-time frame analysis, narrowing down the SND zones, supply and demand zones, which is traditional zones, actually engulfing zones that they are traditional. If you see some marking on the chart like this one, these are traditional supply and demand zones. So we're going to use this concept because they are so clear and there is no confusion when you're using it, actually comparing to the new SND system. So in this one, we have a daily time frame. This is 4 hours time frame. This one is 1 hour. This one is 30 minutes. So we're going to use also 15 minutes as well. So we have top-down analysis. So we're going to narrow down the point when we want to just take the trade. In this example, I'm going to help you learn this engulfing system. So we're going to just follow some steps one by one. So I'm going to show those steps. Here, we have an engulfing. So engulfing happened here on this chart. Okay. So the first step is direction. So for direction, we're going to have direction and direction confirmation. So here we have this engulfing happened. Okay. So after engulfing happened here, as you see, the price is leaving this engulfing zone. Okay. And you can see those things on the chart as well, other charts while they're happening. This zone is on one daily time. So to set up happens, we need it to just come back to this zone again. Okay. So price leaving the zone, coming back to the zone again. And here you can see that it is creating a pullback zone, and it is just leaving the zone and coming back to the zone, but to this engulfing zone. So now let's watch the price while it is playing out. So now I have intentionally didn't change this time frame. I want to see what happens in the underlying time frame, nested time frame inside daily time frame. When you're opening up the chart, when you see the setup, you're not just waiting for this one daily for many days. Look here, we have this engulfing happened here. So 1 day, 2 days, 3 days, 4 days, fifth one, and six, and we're going to have many other days just to set this setup plays out. When you're opening up the chart, you have to see the previous engulfing that happened, okay? Like this one. So you can get sell setup here. So you will see how you will do that. Now let's go and continue this bar by bar. So we're not going to touch anything unless we are coming back to this zone here, okay? This is the zone I'm talking about, this gray area, okay? So we have nothing to do until the price comes back inside that zone. When it is entering it, now as you see here, so price left the zone and came back to the zone, okay? Now, here, what do we have? We are going to shift the time frame. When it is coming back inside the time frame, so here, our job is done on daily time frame. So now we're going to confirm this daily direction if it is going to be bullish or if it is going to break this one. So we're going to go to H4, so which is one time frame below. So I explained it here. So shifting to one time frame below to H4. Now in this time frame, what we're looking for, so then we are looking for CMP. What is CMP? CMP stands for current market price. So when we have this zone happened, okay, we have some failed engulfing here, and also we have engulfing here, also here. So these are not our concerns, okay? Our CMP happens on the right side of the price, not in the middle side, okay? So now it means that, well, here we have this zone, okay? We have this zone. So now after we're just shifting one time frame below, okay? Now here, current market price must happen in this area, okay, on the right side. And later, now we have engulfing sell. It should have been engulfing buy. Let me change it to engulfing buy, okay, on H4, okay. Then we have also previous engulfing sell, okay. Now, but these are not our concerns. Yeah, these are, if you consider this one as CMP, it is a wrong place for CMP. So we don't take this one as CMP. Okay. we take this one as CMP. Here, we look at this one, direction confirmed, we're waiting for CMP to happen. What does it mean? It means that price leaves it, it comes back, and then we go on H4, that we're currently on H4, which is one time frame below of daily engulfing, to CMP to find an engulfing, and engulfing fell in CMP. So now look at this one. We have here, let me play that out. So here we're going to have this engulfing happen, okay? So this one is engulfing fail, right? And also we have engulfing, which happened here. Engulfing buy, which happened inside this engulfing buy, which is a daily time frame, which is on the right side of the price, not in the middle, okay? So these are confluences, that's fine, but it means that this is overlapping. But we're just dealing with this current market price, not the old one anymore. So now we have engulfing buy, but previously we have engulfing buy, engulfing sell, fail. So now it means that here we also have engulfing sell, which is fail. So these two are aligned with a higher time frame, which is daily. So this is the direction of this engulfing is buy. So the direction of this engulfing sell, which is failed, is buy as well. So these two confirm 1, 2, 3. Okay. So this is direction confirmation. So now the right confirmation is, current market price is this one. Okay. Now the second step is also, the first step actually was a direction. Now we're going to leave from this one after this one is confirmed, and we have the break of this structure. Okay, like here, look, this engulfing break. Okay, engulfing breaks in the lower time frame, which is one time frame below, so which is 1 hour time frame. Okay, let me first, yeah, here we're done with this 4 hour. Let me go to after engulfing happens, one time frame below. Okay, this is 1H, which is the same as the same candles inside H4. Okay, so this one is the price that our market is shifting up. Okay, so here we're going to wait for the price to play out again. So it's going up. Now, when it is coming back, sorry, it was a little faster. Now, when it is coming back, okay, so here we, after shifting one time frame below, now we're going to, after, so far, let me just wrap up what we have so far. So far, we have checked. So direction engulfing buy happened on daily. Okay, this is daily. Later, CMP, which is price leaving the price and returning to daily engulfing buy zone. And when it is just touching that area or it is coming back, we are shifting one time frame below to H4. So now, after H4 shifting, we are just going to confirm the direction. How do we confirm it? Using this engulfing buy, okay, and also old engulfing sell failed, okay. These two must be aligned with the higher time frame, which is daily, with the gray one. These brown ones are aligned with the gray one. Now we're gonna go to check for setup. Now after direction, we have setup. So by the way, we have different kinds of setup. So we have strong zone. Actually, we can just call this one confirmation for golden zone and multi-time frame AB zone and multi-time frame engulfing zone. So today we're going to work on multi-time frame AB zone, and maybe I'll explain multi-time frame golden zone a little bit later. If you like it, just comment that I'll just make another video, some other setups, some examples of this setup. So in the other videos. Now that we have this zone again retested, but the point is that before it retests this area, when it is leaving, it is leaving and confirming our engulfing on 4H. Now, at the same time, on 1H, we have also engulfing buy. This is the area, right? When it is breaking, we have engulfing buy, right? So here, so far we have done this. So here, after price retested H4 here, as you see, now and left H4 zone, as I said, okay, it is leaving him. Then the direction is confirmed, right? After the direction, later when price wants to retest CMP again, so it is coming and wanting to retest CMP again. In the lower time frame, which is H1, that we're currently on H1, okay? So what are we looking for? We're looking for setup. Exactly like direction, we are going to confirm direction later. So now that we have, we're looking for setup on one time frame below, which is H1, inside H4. So now we're gonna look to see if this setup is a valid setup or not. Okay, so how do we do that? Now that this is happening, we're gonna go to one time frame below, which is not M30, okay, which is for one, we're gonna go to M15. So for entry, we use M30, okay? So for confirmation, now that we are on M15, so what should we do? We gotta go to step 2B, we can say that. Yeah, 2B is what? We're going to validate the zone inside M. This H1 zone should be validated by old engulfing cell failed and engulfing buy. So as you see, price has just come and passed this zone, so which is fine. So you should say that, should I take a trade here? No, it is not, because we have other steps as well. So we are still in step 2, so 2B. Now, later on, we're going to go to, after this is confirmed, okay, yeah, we have H1, we have failed engulfing cell, and we have engulfing buy. So this setup is multi-time frame AB. Multi-time frame AB is one engulfing, which is blue one, M15 engulfing, and at the same time, engulfing failed, which they overlap here. So if they were not overlapping, it would be multi-time frame engulfing. So it would be one here, one there. They were not having any overlapping. But now we have overlapping. This is called multi-time frame AB. Okay. Now that we're done with this one, so our setup is confirmed. Where do we go? We need to look for confirmation for entry. So this is step 3. So confirmation for entry. So in that case, as I explained already, so we're moving to M30, right? M30, we are not taking trade yet. So on M30, what do we do? On M30, we are going to have confirmation, okay? Confirmation for entry. So I'm going to explain that. So how do we confirm our entry? Before entry, we need to confirm it. So how do we confirm that one? So we have multiple ways. One of the ways is that we use, let me turn this one to, okay, line chart. Okay. Now, as you see, this is the line chart here, right? So after we have this trend line, and this trend line is broken, and the close of the candle is taking the green line, breakout happened by close of the candle. So then we have one kind of confirmation. Now, the second kind of confirmation that you can have is engulfing buy in M30. Also, this engulfing buy, as you just noticed, happened inside engulfing buy in H1. So this is double confirmation. Also, this is our another setup. We call it golden zone. Okay, but here we're going to use this one as our confirmation. You can use other confirmation, personal confirmation, to validate this area as well. So then after this M30 is happened like that, now the confirmation, which is step 3, is done. Now let's move to entry. Okay, the entry could be based on break and retest, or could be based on engulf, or could be based on whatever system you have. But I'm going to show you trend line, break and retest, and engulfing here. Okay, let's make this one work like this one. You see here. Now we have the confirmation here by this line. Okay, now this time we are going to just take the trade. How do we trade it? We have, as I said, told you. So this is our, let's say, fractal engulfing inside each other. This one is the gap. Okay, and if you're not familiar with this one, that's fine. So you don't need to just use this one as for your trade. But sorry, for this one, we're going to use break line, trend line break. Okay, I call it cut line. Okay, so now, sorry, we will wait for the retest. So afterwards, we're going to wait for the retest here. Now, if you see, we have a retest here. So it means that we're already inside the trade. Now, let me put my, now here, you're going to just adjust your line in a very safe zone. You can use this one. You can use, you can enter here, okay? Or you can go to one time frame below. So it is not mandatory. It is just kind of like, you can do that. So you're gonna just put your stop in a way that you can just put it behind the zone, which is close. So it's gonna give you more RR. But also, just coming close doesn't mean it is safe. Or it's better to just adjust it behind this zone, overlapping zones here. Okay, M30, H1, M15s. Okay, and also this one, even the first one here. Okay, let me just draw this as well. So the color should be blue for M15. Okay, so if it goes down, it's fine. So if it comes here in the middle, that's fine as well. So now we're gonna play that out. So we're already in the trade. This area is our what? Our drawdown area. So it will possibly, it will just come and retest this area. Okay. So you should have had your entry instead of this part, this area. So you could have waited, or you could enter in the sweep of this area. Okay. Like, let me show that. So this zone, let me just put it like this. It's already swept. So this is better entry. Okay, it gives you better entry, safer stop loss, and smaller stop loss. So that comes with the patient. Okay, so sometimes you're losing the trade. So you would not have the FOMO because we have a lot of other pairs. So because in this kind of trade, you can use it for actually swing trading or even scalping, but because you don't want to just miss a trade, so you can use the higher time frame, and we could have many setups in different time frame, different instruments, and so this is the better one. So if you just take this one and let's just say you're exiting the trade here, so the same kind of trade, the same range here, you'll get 1 to 83. Here you will get 1 to 293. Okay, so almost 1 to 3. So, but the same range of movement. Now, here, let's go with the trade. So, now, after it is leaving the zone, okay, like this, what should you do? You should just monitor the trade. So you could have a fixed stop loss, sorry, target, okay, and you could just check on, because you have just taken the trade based on H1. H1 is your setup, okay? That's why on step 2, we were saying that H1 is important. So you're going to monitor, so all the engulfing which is happening in front of the actually price and behind the price. So how do we manage it? Up until we have any failed engulfing, we're going to stay in the trade, okay? So it means that you got to go till, okay, now here we have engulfing sell, okay? So this one is engulfing buy. This is not failed yet, but you could have gone out of the trade like here, okay? So if you go to lower time frame, you can see that it is, let me just make it in a way that it is visible on 1 hour as well. So yeah, also this one. So now that you're monitoring the trade, so you could exit the trade here. It's up to you to play it safe for these areas that they're roadblocks, okay, in front of the trade. So, or if you can just wait for the price to just make higher high and lower low. So, and you just try to trail based on the what, higher high and lower low, like this one. Let me just do that. So here, look, we have already been here. Okay, let me just do this one from the beginning. I will show you how to trail your. Okay, now let me go back here. So now here we're gonna wait. Let's pray it out. Okay, so this is broken, and this is the lower low here. Okay, so your SL should be trailed behind this one. You're almost at the break even. So this is your stop line. So this is your stop line. Okay, so we are waiting for the price to make a counter trend move and later breaks itself. Okay, in that case, you're gonna trail this one here. You're gonna trail this one later. If it moves on and again makes another counter move and breaks itself, we're gonna move it up until here. Okay, now let me show you what happens here in this scenario. I haven't checked it before. Let me see if it works. Gives us good RR. Now let's go. Okay, now it broke itself. Yeah, it broke itself. gave counter trend move and broke itself. Now our stop loss is trail up until here, right? We're playing it safe. Okay, now let's see what happens later. Okay, now again, it made a counter trend move and it made up, it went up. So we're going to trail our stop here. So first trail was here, later here, now here. So let's see what we have. Okay, so because we have enough of RR here already, now that we're going to consider even this minor moves, okay? So we're looking for a way to just exit out of the trade, okay? So, but we're just playing it a little bit safe as well. Let's just put it here. Yeah, so our trail would be there. And let's see if we're tagging it, the price tags it out. Okay, yeah. Here, the price takes us out. And also this one, no difference. Let me take it away. Yeah. So this one is the way that we are trailing that price. This one and this one. So here it would be 1 to 3.5. This one it would be 3 point almost 5. So if you want to just keep based on the major swings, let's see what we have. Is it going to just take us out, or it's going to go up? Let's see. Yeah, it broke itself, and we are trading based on the major swings. Our stop is here, okay? Now, or here, let's say. So it depends, okay? Now, here is a little personal, okay? I haven't checked it yet. You could use this way. You could use this trend line for trailing, or you could use whatever. So the further your stop loss is, the safer it is. It could give you bigger RR, but also it is possible that it comes back and takes you out. Okay, now you can go there. Let's trail it up until here. You can also consider higher time frame movement as well. Like here, you can say that, okay, the price is already there. Let's just check it on also daily. You can see this is the movement we have on daily, okay? Now, okay, you can see that here. Let me, okay, now, here is the movement. So you could just trade it here and get out of the market, or trade it like based on 1 hour. So every 1 hour, you could come to the chart and check it up. Let's see what happens. Let me make it a little faster. Okay, just a second. Uh-uh. Better. Yeah. So let me. So now that price is consolidating here, it is barely breaking it, right? It's barely breaking itself. So now we're looking for any excuse to just get out of the trade, unless it is just shooting up. So, but so far, we have locked this much R with this entry, and if it was this entry, wait a second. Okay, this one. So 7.80, blah blah with that one. So it also broke this one, and also this one, and we're locked the here. This is for this entry. Okay, just a second. Yeah, let me just make it like this. It's better. Easier for move it. This one is 13. This one is 20. Let's see. We're tagged out. Okay. Now our stuff is here. I forgot to put this stuff there. I think it was here or yeah. Now we're locked in. Here we are. Now we were just trailing it up until there, and this one up until there. Because we have made this higher high. Okay. Okay. Now that we have trailed our TP up until there, and this one here. Oh, the same stuff. Okay. Now we are out. If it is just very tight like this one, what is this? 23. And if it is this one, 14 or 15. So this is the way we take a trade like this one. So it happens because engulfing are really high probability entries because they happen inside a very deep retracement usually, like this one here. If you look at the daily one, as you see, we have this pullback on daily, and okay, again, when this pullback is happening inside it, we're trying to just get the high probable one in the beginning of the pullback. So now it is happening. Now it is going inside this one more pullback. So we're going to go and hunt this one. So we cannot wait for all one instrument to happen. You can use the lower time frames, or you can use many instruments at the same time to have more setups. I hope it helped you. So if you like this one, just let me know. I will give you more examples of this trade engulfing setup. And stay tuned. Take care. Bye.